Hey there, investors and future millionaires. Today, I've got an exciting topic that's going to blow your mind and potentially change the way you think about growing your wealth. We're diving deep into the world of buy and hold investing, and trust me, you're not going to want to miss this. You've probably heard the phrase get rich quick thrown around, right? Well, today, we're going to explore a strategy that's more like get rich for sure. It might not be as flashy as day trading or as thrilling as timing the market, but it's an approach that's created more millionaires than you can count. So, whether you're a seasoned investor looking to refine your strategy or a complete newbie wondering how to get started, this video is for you. We're going to unpack everything you need to know about buy and hold investing, from its core principles to real-world examples that'll make your jaw drop. Buckle up, folks, because we're about to embark on a journey that could transform your financial future. Are you ready? Let's dive in. At its core, buy and hold investing is all about playing the long game. Instead of trying to time the market or make quick profits, you're focusing on purchasing quality assets and holding on to them for extended periods. We're talking years, even decades here. The idea is to ride out short-term market fluctuations and capitalize on the overall upward trend of the markets over time. Now, you might be wondering, why should I bother with this strategy? Well, let me tell you, there are some serious advantages to consider. First off, it's a relatively low-stress approach to investing. You're not glued to your screen, watching every market tick or losing sleep over daily price swings. Another big plus, lower costs. Every time you buy or sell an asset, you're likely paying some form of transaction fee. These can really add up if you're an active trader. With buy and hold, you're dramatically reducing these costs, which means more money stays in your pocket. Let's talk taxes for a second. In many countries, long-term capital gains are taxed at a lower rate than short-term gains. By holding on to your investments for longer periods, you could potentially reduce your tax burden. It's like the government is giving you a little pat on the back for your patience. Now, I know what some of you might be thinking, but what about missing out on those big market swings? It's a valid concern, but here's the thing. Trying to time the market perfectly is incredibly difficult, even for professionals. By staying invested over the long haul, you're more likely to capture the overall growth of the market. Let me give you a real-world example. Imagine if you had invested in Apple back in 2008. At that time, you could have picked up shares for around $18 each. Fast forward to 2023, and those same shares are worth over $170. That's a return of more than 800%. And that's not even counting the dividends you would have received along the way. Of course, buy and hold isn't without its challenges. It requires patience and discipline, especially during market downturns. It can be tempting to sell when you see your portfolio value dropping, but remember, these are often temporary setbacks. History has shown that markets tend to recover and reach new highs over time. One key to success with this strategy is diversification. Don't put all your eggs in one basket. Spread your investments across different sectors, asset classes, and even geographical regions. This helps to mitigate risk and smooth out your returns over time. Another crucial aspect is choosing the right investments. Look for companies with strong fundamentals, competitive advantages, and potential for long-term growth. Warren Buffett, one of the most successful investors of all time, famously said he looks for businesses so great that an idiot can run them, because someday one will. That's the kind of durability you want in your portfolio. Now, let's address a common misconception. Buy and hold doesn't mean buy and forget. You should still regularly review your portfolio and make adjustments as needed. Companies change, industries evolve, and your personal financial goals might shift over time. The key is to make these adjustments thoughtfully and infrequently, not in response to every market hiccup. One of the most powerful aspects of buy and hold investing is the magic of compound interest. As your investments grow, they generate returns, which then generate their own returns. Over time, this snowball effect can lead to impressive wealth accumulation. Albert Einstein reportedly called compound interest the eighth wonder of the world, and when you see it in action, it's hard to disagree. Let's get personal for a moment. When I first started investing, I was tempted by the allure of day trading and quick profits, but after a few stressful months and some losses I'd rather not talk about, I realized that approach wasn't for me. Switching to a buy and hold strategy not only improved my returns, but also my quality of life. I sleep better at night, knowing I'm invested in solid companies for the long haul. Of course, buy and hold isn't the only valid investing strategy out there. Some people do well with more active approaches. The key is finding what works for you, your risk tolerance, and your financial goals. But for many investors, especially those who don't want to make investing a full-time job, buy and hold can be an excellent choice. As we wrap up, remember that investing is a journey, not a destination. It's about building wealth over time, not getting rich overnight. Buy and hold investing aligns perfectly with this philosophy. It's about having faith in the power of markets, the ingenuity of businesses, and the resilience of economies over the long term. So, what do you think? Are you ready to embrace the buy and hold approach? Or maybe you're already a convert with some success stories to share. I'd love to hear your thoughts and experiences in the comments below. And hey, if you found this video helpful, don't forget to give it a thumbs up and hit that subscribe button for more investing insights. Remember to tap that notification bell too, so you never miss an upload. Until next time, happy investing.